Okay, we're going to do a quick video on Bitcoin price prediction. We're going to take a look at Bitcoin and we're going to go over some Bitcoin news. This chart that we're looking at is from TradingView, and it's Bitcoin on the Coinbase exchange. It's got three moving averages on here. It's got a 200-day moving average, a 20-day moving average, and a 5-day moving average. Now, if we take a look from the history of this real quick, we can see that we're significantly below the 200-day moving average. We had a tremendous rally in Bitcoin over 68,000. We had a steep decline down below 26,000, significantly below, and we're now, as we speak, in the last 2-3 weeks, going sideways. So when you're using moving averages to take a look at a market that's going sideways, they're really not a whole lot of help, and they can really cost you a lot of money. If you take a look here for a minute, Bitcoin clearly tested back here in March, tested this 200-day moving average, came right up and bounced it. You could have sold against that. I'm not recommending that, but you could have sold against that, and you probably would have been in good company. The fact of the matter is it failed that test and made new lows. So moving averages on this way down, you can see this 20-day was a great way to follow this stock down and to really give you a good idea of what was going on. That's not, that's always in hindsight. Whenever you're using a moving average, you're talking about hindsight. But when a market is trending, these moving averages can be great. You can see in this portion from January till the middle of March, again, clear sideways movement. You had extreme volatility in the 5-day, but very, very large rallies, right? This was 33,000 to 45,000, and then you fell back down again. This will whipsaw you to death if you're using moving averages to trade a market like this. Again, you had clear breakouts here at this point on March 19th, roughly, right around in here in March 18th, 19th. You had a crossover, but you were coming out of this, what most people would call a triangle. You can see that this low was lower than this high. This high was lower than this high. This bottom was higher than this bottom, and if you put some trend lines on there, you'd see it was forming a triangle. Most people would have told you that this was a bullish signal at that point. I don't buy into all that because it's too subjective. However, most people would take a look at it that way and say that this might be a safe place to enter back here in March. To me, this is not interesting. When a market goes sideways, I'm not interested in moving averages. This would have been a very interesting place to look at it, and a very interesting place to position yourself for either a short trade or maybe with some options, or a breakout to the upside with some options. Again, all depending on your analysis, but that's the way I look at these moving averages in this particular chart. Now, we move down to where we are today, or the last couple of weeks, sideways. Even the 5-day is sideways. The 20-day moving average is flat. We're still below the 200-day moving average, so we're officially still in a bear market. But you'll notice this distance between here, this 29,000 roughly, and 41,000. That is a tremendous difference to where what I would call some large amount of risk as to whether or not we're still in a bear market. Most people are going to want to test this in this range before they make any serious decisions to go long again on this Bitcoin. They'd want to see something come up here. This moving average would be probably down to here by that point, and see if we closed above it. That would be a signal that you might want to get long, depending if your other analysis validated that. I don't trust moving averages for any buy or short signals. I use them just to help me get a quick idea of what's going on with the markets. You can trade and you can get rich using moving averages, but it's subjective and it takes years to learn how to do it. There's a lot of other, in my opinion, algorithmically generated ways that are better, more statistically robust, and have a better performance profile than moving averages. But moving averages can be a really quick and simple way to visually see what's going on with the market. And you can clearly see that here with a 20-day. This market was clearly continuing down. You weren't taking a tremendous amount of risk here, but as you got to this point right here on May 12th-ish, you were in danger of getting a rally all the way back up to this 20-day just to test it. And that's a significant, that's almost 5,000 difference there from the sideways up to this 20-day. Right at this point, you could easily have said that it would test this. So moving averages become less and less effective and less helpful the more this move starts to move away from the moving average. When the actual price is greatly, this gap is great, and the distance is clear, a moving average loses its I don't want to say reliability, but its significance as far as I'm concerned. This type of price action right here is when a moving average to me is very interesting. You can see the close on this day right here at that point was right on the moving average. That would have been very interesting, and a lot of people would have been watching it. You can see the next day was a very significant range day for Bitcoin. Now, moving forward, we're sideways. So what is a good estimate or a Bitcoin price prediction for moving sideways? The answer is, using moving averages, you don't have any idea. You can't really statistically tell what's going to go on here. But you can statistically tell what's going on if you use some algorithmically generated prices, which we'll take a look at in a minute. But in general, using moving averages, I'm expecting one of two things here. Probably a rally in this range to see if we're going to test and see if this bear market's over. But you could easily get a continued sell-off. I don't see that happening on this chart, but you could easily get it. You could get a sell-off down to here, this range here, 20s to 21, 22. But I think more likely you'd get some type of rally around into here about the 35, 36 mark before you got any further move either up or down of significance. And let's move down here real quick and look at what our algorithms say. RBM Research puts out algorithms for Bitcoin every morning before 7 a.m. We're right here. They come out at 1 day, 2 day, 5 day, 10 day, and hold increments. At 10 day and 20 day hold increments. And they come out either a buy or a short every morning before 7 a.m. We publish these Monday through Friday. These are completely different than moving averages. These are algorithmically generated. They're statistical. They have defined characteristics, and there's no subjectivity to them. We put in our pricing data, and the algorithm spits out these entry prices. Now, again, these are recommended reference points. You always have to use your own judgment. You can't use anything on this entire website as an absolute entry price. You have to use your own research. But for reference points only, let's say you wanted to, because we're in a short-term trading range on Bitcoin, let's say you wanted to day trade it, buy today, close out tomorrow at the end of the trading session. If the price traded through 29,969 today, this might be a good place for you to consider getting in the market, assuming your own research backs that up. You would basically get in today, short it, and then get out worst case by the end of trading tomorrow. That would assume you took a loss. If you take a profit, you get a profit, take it. In other words, as soon as you get the profit, you take it. If you don't get it, you close it out worst case at the end of the trading day tomorrow. And it works the same with all these. If you want to do a 5 day, you could short at 31,367 today if the market hit it, and then worst case you'd close it out at a loss at the end of the 5th trading day, or take your profit if you were able to get it as soon as you could. So you might end up holding a 5-day trade, 1 day, a half a day, or 4 days, depends on what goes on. But you trade it out at the end of 5 worst case and take your profit as soon as you got it, assuming there was one. Same thing for the 20-day. Basically what happens here, the further you go out and are willing to hold, you get a slightly higher win rate and you get a slightly higher average profit. But keep in mind, even on a 20-day hold, if you got in at 31,367, you may close it out the same day at a profit. You may close it out in 2 days, 5 days, or you may close it out at a loss at the end of 20 days. But that's just the way this system works. So these are published every morning before 7 a.m., Monday through Friday at rbamresearch.com. We also cover 190 stocks, the major forex pairs, and the most liquid futures. You can get these absolutely no cost. They're 100% free, no credit card required. There's a link below in the description. Again, it's to rbamresearch.com. If you like this video, please hit the like button. If you want to subscribe and get more, please subscribe. And keep in mind, everything on this website is for entertainment purposes only. You definitely trade at your own risk. You can't use any of our entry prices as anything other than reference points. You always have to use your own judgment, your own analysis, and consult a financial advisor if you think you need one.